Hi, today I'm going to be sharing with us 5 very common mistakes traders make in the market. Especially these mistakes are made by novice traders or those that are still learning the business of forex trading. And unfortunately, these mistakes, they keep making them persistently and they have no idea what they are doing. They keep blowing their accounts, they keep running into severe losses. So today I'm going to be sharing 5 very important mistakes you have to avoid as a trader. Okay, but before I go ahead with my summary, do well to like our page, share our videos, and make sure to also subscribe so that you're going to get notifications once we release more of our videos. Now, the first one I have on my list today is conditioning your mind to always win. This is very important because I see so many traders, they feel like, okay, I must always win. If I don't get into the blues, it's unacceptable for them. No, you don't really need to think that way because this is a business, right? You really need to understand that there are times you're going to win, there are times you're going to actually lose. That's exactly why you need to treat your strategy as a business. Okay, you really need to treat whatever you're doing in the forex market as a business. You really need to expect that there are times when the market will go against you, there are times it's going to go in your own direction, but the most important thing there is actually risk management. So conditioning your mind for acceptance of potential losses is going to help you, because when you know that if you've got an account of maybe $10,000 and maybe you are in a loss of about $200, okay, it's very easy for you to accept your loss and move on and wait for the next trade. Hopefully the next or subsequent ones may just be successful enough so that you're able to recoup whatever you had lost. That is the first one. Okay, now the second mistake most traders actually make in the market is not doing their risk management. This situation for so many new traders. Now you find a pair that is probably selling and you jump in as a seller. After some minutes or some seconds, it goes in your direction, you're making money, and this person actually is using like a $1,000 account, right? He has actually used a 5 micro lot account, like he has actually opened a 5 micro lot position and it was going in his favor. All of a sudden he increased this to about 5 or maybe increased this to about 20 micro lots. I'm going to be making more than I'm actually making now. So what gets into his head is, okay, I'm going to take more lot sizes. Then he opens more position, same $1,000 capital, and maybe for whatever reason it was going in his favor. All of a sudden it takes up maybe one full lot size and the market does like a retracement. What happens to him at that point? He loses the entire monies he had made. That's exactly what happens when you fail to do your risk management. I have seen someone that got so lucky. Of course, this person was a novice. He was actually trading a $500 account. The person actually doubled it within a day. Then unfortunately, because it was actually going in his favor and it was like, okay, increasing the lot sizes. So by the time he got to an X, he was like, oh, I keep trading like that. So the next day he saw another setup. He took that setup with the same mindset that he's going to still make the same amount of money he had made the previous day. So what happened to him? He backfired, right? And that's why exactly where you hear people say, I made so much amount of money in forex, all of a sudden I gave the monies back to the market, because they had already failed to understand that they needed to do their risk management. So the next one I'm going to be discussing is people always wanting to trade. You always want to be in the market, you're always on your phone, you're always looking at metadata 4, you want to just trade. I really need you to understand that there are days that the market is not going to have any setup. Like it's going to be a quiet day. Like there are times where you're going to have public holidays and you're going to have the market, all the markets, forex market will virtually be so cold, like so down, nothing really happening. And some people just feel because they have this urgency or that need to always trade every day, they just look for one kind of setup, and maybe they try to force a trade, right? They just try to take a trade, and at the end of the day, what happens? It backfires and they lose. So you really want to understand that there are times you don't really need to trade. There are times you stay out of the market, and when the market presents the opportunity, you go in. And one thing you really need to understand is that you have to always be reactive. You don't expect the market to react to your own position. Okay, you really need to wait. Whatever the market is doing, you react to the market's movement, and that's exactly what you need to do. So looking at the market and it's been cold and nothing has been happening, all of a sudden you're trying to force a trade. Of course, you're doing yourself lots of harm than good. What one I'm going to be discussing this evening is people not allowing their trades to materialize. It's a very important point. I see someone, you've taken a trade for, after some minutes it was going in your favor, like after like few minutes you're getting like 15 pips, 20 pips, and this is a trade that had the potential to go to about 100 pips, but because you found yourself in a plus, like in a positive, you're getting like 20 pips, and meanwhile your stop loss was within 30 pips. You put a stop loss, maybe you did like a 2:1 ratio, you're risking 30 pips to get like 60 pips, or maybe you're doing like a 3:1 risk reward ratio, right? You're risking like 30 pips, for example, and you're hoping to get like 90 pips. Now you took that trade, and after a few minutes the trade went in your favor, and rather than you exercising patience and allowing your trade to attain full potential, you find it gets to like 10 pips in your favor, you close. Why did you close? When asked, you're going to feel like, oh, what if it goes, if the market reverses now, I'm going to lose these 10 pips. It doesn't work like that. Sometimes you really need to understand that you have to allow the trade to materialize. Only with that you're going to make good progress in the forex market. And the last one I'm going to be discussing with us tonight is refusing to make withdrawals. This is very important. Have you ever met someone who tells you that he has actually traded, I traded $1,000, I made like 1,005, or maybe I made $2,000 within 1 week, and the following week what happened? He blew that patience and allowing your trade to attain full potential. You find it gets to like 10 pips in your favor, you close. Why did you close? When asked, you're going to feel like, oh, what if it goes, if the market reverses now, I'm going to lose these 10 pips. It doesn't work like that. Sometimes you really need to understand that you have to allow the trade to materialize. Only with that you're going to make good progress in the forex market. And the last one I'm going to be discussing with us tonight is refusing to make withdrawals. This is very important. Have you ever met someone who tells you that he has actually traded, I traded $1,000, I made like 1,005, or maybe I made $2,000 within 1 week, and the following week what happened? He blew that account. That's exactly what happens to you when you refuse to withdraw your profits. Please, it's very important. You have made some amount of money. It's important to withdraw some amount, probably like a 70% off, take it out, leave the remaining 30% to boost your capital. Why not? You actually deserve that because you labored for it. You took your time to do market analysis. You took your time to go through the market, and you have actually made some money for yourself. Why don't you withdraw it and do something with it? But some traders prefer to be like, okay, I'll just withdraw it, leave it there. And what happens? The next day they go in and it doesn't work for them, and they actually crash. Whatever they had made before, they actually lose it back to the market. So it's very important, whenever you make you get successful trades, please make sure to withdraw your profits. So that's exactly where we're going to be wrapping it up for tonight. Please, just like I said previously, do well to like our videos, share, subscribe, so that so many persons will get this information. So until the next time we're going to have a meeting, wish you a very sleek week ahead. Bye.